aboard Kailash Lalpuria, the ED and CEO at Indocount Industries, joining you on the show right now. Shortly, we'll be joined by Rajiv Ranjan, the president at the Textile Association as well, on the show. Kailash, hi, good to have you on the show. Thanks so much for taking the time out. Let's really start by discussing what exactly is the export outlook right now. Because what we understand is that recent data from US when it comes to the retail numbers, etc., has been showing improvement in sentiment. Has this really translated into more business for you?
Absolutely. As I had mentioned in my earlier con call as well, that FY25 will be better than FY24 because there were pain points in the earlier two quarters of FY24 and FY25. We do not have those pain points, whether it is supply chain, whether it is cotton. There are some instances due to the geopolitical situation, but it is applicable throughout, like globally. So we are part of it. So we are waiting and watch. But in the marketplace like US, there are positivity and you see all the numbers, whether it is unemployment, whether it is retail, whether it is e-commerce. So the confidence level to buy discretionary product is inching up. So I would rather say the market is stable. It is moving towards, positivity in the coming, period.
Growth, Mr. Lalpuria, coming from? Is it coming from large big box retailers or it is coming really from new supply chain beneficiaries?
Both. The retailers are doing extremely well, as you see, because the wage rate has gone up. So the wallet size have increased and people post-COVID are become more aware and they need functional benefit. They need value-added products. They are looking for new product line in order to support their lifestyle. So I think it is inching up, in all segments.
Are you gaining because China is losing or the market is growing for both?
For both. China plus one is very apparent from the numbers we see on the Textile. It has come down in the last 4-5 years from a 20% market share in our product category to almost like 12%. And the buyers and retailers, they do want to de-risk from one resource. And so India is playing out well because India is well positioned. So India's market share is improving and definitely it will be a big resource in the coming future. So it is coming out, very well that new players are also coming in. There are various, e-commerce players which are doing well because people love to have convenience, people love to have a good deal, etc. And they would like to buy more brands and support their lifestyle. So each and every segment is inching up as far as business is concerned.
So welcome into the discussion then, Mr. Rajiv Ranjan of the Textile Association of India. Thank you so much for taking time out. We wanted to just get in an all-round view. We were just talking about the data from the US retail, which shows a lot of improvement in sentiment. Break it down for us in terms of product categories, demand, geographies. How are things shaping up?
Things, the worst may be over as of now. And the last 2 months have shown better results. So going forwards, things are inching up and things should be much better this year. That is what our impression in the industry is. EU and the US have been very, very low in the last 1 year, and all the textile exporters the world over have suffered. But things are improving and we are very hopeful that things should get better this year.
Kailash, there are
India's exports also, if you see, for the last 2 months are showing a better trend.
There are three things I can just recall broadly which are different. One, rupee is at a new low, which means for an exporter, great news. Cotton prices have not gone through the roof, which is also great news. And C, everybody is trying to go away from China at least for 20% of the outsourcing. That's what all the big box retailers are doing. So can I say that next 2 or 3 years, the textile exporter or the textile exporters in India are in for a good run? At least 2 or 3 years, you think this will continue?
Certainly. And you see the perceived value for Indian exporters has gone up tremendously because we are at an advantageous situation and we have performed well during difficult times. If you look at the last 4 years, we have seen like COVID, we have seen all kinds of disruptions economically due to the geopolitical situation. But India has performed and kept its stride. So I think this perception level will help India to grow its market share. India is also working upon the various FTAs, and this will also be a cherry on the cake because it will help us improve our market share globally. So the next 2 3 years, we see that India growing both in the domestic as well as the international market and regaining a good confidence level as a secondary source, and that's way it will be moving up its own market share in the coming 2 3 years.
Given that the cotton futures prices for the coming months as well have dipped, how is it that you're looking at these prices trending from here on? Mr. Ranjan.
Yes, please. You're talking about prices of fabric, of textile products?
Yes, cotton futures prices as well for the coming months that had dipped. So, what is the
Yes.
outlook that you're seeing in terms of the trend in prices?
No, we see cotton prices to be fairly stable for the coming months. Fairly stable.
Kailashji,
Does that answer your question, Mr. Lal?
there is global warming in place, and I'm again trying to draw this whole idea of what crops could do, what seasonality could do, what seasons could do. Cotton prices today are manageable, but if they move higher, that means yarn prices will go higher. If yarn prices will go higher, fabric prices will go higher. If fabric prices will go higher, the finished garment prices will go higher. How is the industry planning to prepare, or is the industry ready for a hot summer which eventually could have impact on cotton sowing this year?
So I was going to add to Mr. Ranjan's statement, that you see, we are a cotton surplus country. So if you look at, we export raw cotton, we export cotton yarn, we export fabric, and we export cotton made-ups and apparel. So we are an surplus country as far as cotton is concerned. Now, if you look inward, if you utilize this for our own captive consumption, the export figure will definitely go up, and cotton is a sustainable fiber. The government is also taking steps to see how we can improve the yield, how we can improve the awareness among the farmers to grow a better, crop as well as both in quality by bringing in the Kasturi brand and, all kinds of efforts which they are putting on to see how they can sustain the cotton growth in the coming year post the climatic impact which we are all seeing. There are challenges, of course, but India has taken, definite steps towards sustainability, and that's where, the cotton crop will be sustained for a longer run, and it will help our industry to grow further because cotton is a fiber which is fully recyclable and reusable, and it will give an impact to the overall industry by sustaining this crop.
Within the broad categories of textile exports, garments, fabric, home furnishing, stroke bed sheets, which is one category, Rajiv, where you think next 3 years there could be extraordinary growth, and which is one category where volume may disappoint?
India is competitive in terms of bed sheeting, and Mr. Lalpuria is the best person to answer this question because they have been doing very, very well in the sheeting business. So, as far as sheeting and made-ups are concerned, India should be doing okay. Garment is going to remain a challenge unless and until the FTAs go through with Europe and UK. That will definitely help us in terms of a level playing field across the globe and in terms of competing with Vietnam and Bangladesh. And China, of course, is there. The space that they are vacating, it's a question of who grabs it. So if these FTAs goes through and go through and create a level playing field, I'm sure the garment business also is going to improve in the coming years.
Okay. So,
But I see India remaining competitive as far as bed sheeting and towels are concerned, made-ups.
Mr. Lalpuria, final question. Can you just give a very ballpark number to our viewers so that they understand that which way Indocount is moving? And can you compare 2022 to 2024 in terms of order booking, in terms of the forward guidance, and in terms of price realization? Can you quantify for us that how much growth visibility is there now?
Of course, like we feel quite confident, as I had mentioned, that there is a cotton supply chain, then India had performed well under all segments. And for Indocount, of course, we have grown, in the last 5 years, almost more than 12% CAGR. So this explains our strength. We export to 54 countries and we have got a good base already built up. We have diversified into 7 verticals. Let me tell you, apart from just supplying sheet sets where we are the global leader. So we have fashion bedding, utility, institutional bedding, we have domestic business, we have e-commerce, and we have branded business. So these 7 businesses are businesses in itself, and we see a good growth because some of them we haven't even explored. And look at the global supply chain, like see countries like Japan, Korea, Taiwan, many of these countries in Europe, we are not even supplying more than 5%. So that is the potential over there. We do not supply anything to Brazil or Russia as made-ups. So these are large trade blocks which are out there, for grabs. And our company is a debt-free almost company. We are well established, exporting to 54 countries. Now we are charged with this new brand which we have acquired, which is the largest home fashion brand in not only the USA but registered in 45 countries. So we have scaled up to the premium and higher segment. So it looks very positive for us to have a continuous growth. We have made strategies to see how, apart from B2B, we venture into B2C and D2C with this brand profile. And certainly the premium and the branded segment where we have elevated will give us enough scope for growth in the coming year. Our core capacity is already built up. We have capacity to service. So those are the operational capabilities which we have built in the last 2 years, and this we are going to sweat in the coming years with the financial standing we have to see that the company goes to a new level of growth.
Mr. Ranjan as well as Mr. Lalpuria, it's been great interacting with you. Thank you so much for giving us an overall view on how things are shaping up within the textile industry in terms of pricing as well as the impact of the global headwinds. Let's quickly move on.